Welcome to TradeTheMBI.com. This is John. This report is for the 15th of August. And we're continuing same little range here. We're above the 76 and right below the ABM Gold. Now the ABM Gold is acting sort of as a resistance here from a daily standpoint. We're still within that sell configuration, but as long as you have the short-term buyers rising, which this I said would be the key where we would meet with on the DOC, the steel and orange. And how they react from here is critical because a pop-up of the orange and a decline of the steel should exacerbate a move lower. We're still below the red line on the extreme histogram, meaning it's ironic to say you're oversold or at least have reached an extreme of selling, and you're still above the 76%. So all in all, that's not exactly a horrible spot to be in. And again, this gets back to my whole comment too. You need to have more impetus reasons to see a broader decline as opposed to just the normal fluctuation. And we're still in a very tight range comparatively speaking, though I would say intraday we're starting to get a broader range within the normal daily activity, which is something we expected to see this month, just as there's a rotation taking place into yield return and whether or not people want to be in safety versus in the market, and that spread is still working itself out. And we're probably going to start seeing a little bit more of a exacerbation of that, which means we could even see the ATR from a daily standpoint increase significantly. You can see even stronger here with the cross of the steel from the orange on the NASDAQ, and it had already been performing better in general, and it's above its ABM Gold, so that one becomes even easier target because then below that ABM Gold, you know you've got your move. And then also this one has a short stop above it, under the magenta stop, so adds another level to utilize. Now we're starting to get the euro back into the normalized range. Gosh, we would have to shrink this way down to get to the other line. All the way back down here at the 111 range. And for this, we can always just say extend all the way to the right, just like that. And so if we go back up to the current, you can see that we've pretty much filled back in a lot of those expectations from, geez, way back here. You know, people say to me, oh, well, you know, what if positive extremes don't fill? You know, in time, more often than not, they eventually do. Now we've gotten all the way over to here, so all these have filled. That just leaves the next set, which potentially takes us down to the 112 range from another set. These had already been filled back in, so not really relevant from that standpoint, and that would conclude pretty much all of those going back, to the beginning of April of the year, where they created that little bit higher float, and that gives us a nice close-up view. Nothing's changed with that deep red from a euro standpoint there. Treasury's still, you know, again, I always had this line here because I think that becomes a critical pivot point from this 120 range all the way down to the 113. Is my expected range in there, and that's why I've had that for quite some time. And we've been seeing that, you know, a little bit of movement above it. We moved pretty much equal distance below it, and that gives you an idea of that kind of wave action. And from oil standpoint, still riding high in that medium range elevated area, even though we've been in pretty decent weakness. There's been plenty of supply. And that's just because they're able to ramp up that production. It usually takes a week or two from the time they start seeing, you know, thinning, and there's an increase in production, blah, 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 blah. But again, I still see this as the inflation trade counter to gold, and that's why you're not seeing much interest in gold, particularly here. And I think you'll probably even get more of that as gold in particular is hammered by the fact that oil is going to be traded in more than just the US dollar, and that flexibility makes it a little bit more of a universal, almost a world currency in and of itself, because now it's traded in yuan, the Russians want to do it in ruble, so you're starting to spread what access you have, depending on what you feel from a forex standpoint, currency-wise, where you want to be. You can pretty much transition to any of those. Here's how we saw it. We were talking about this in the morning. We were above the 50%. We were expecting a move, to the highs. We ended up getting towards there. We ended up with these positive extremes when we saw the gold made new highs there, so we had the expectation of a retrace back down to that. Filled it perfectly. We ended up with the nice DOC spread that took place right there. It was at the same time you were getting the rising orange, falling steel, and in this particular case the green had shifted below red, and the cyan was meeting it. At the same time you're getting azure rise. That was a perfect opportunity to get that little bit of a fill, and it did. We were still expecting this, though, to come back to pre-market highs, even when I was talking about it. We ended up coming across, had a little bit of a dip right there, but then got a perfect buy configuration, literally, right as it dipped below that 38% came right back above it, and then once it hit the 50, even if you wanted to stay in an extended move beyond what the dip below the red line was, you still would have had to have covered, which pretty much 50% became the low of this bar anyway, which was right about there. So kind of matched it. Still decent from a 5-point standpoint. And then propelling all the way up, we got a series of more positive extremes right in there, calling for a retrace right back down to this level, which didn't fill until after the market closed. And once that took place, there wasn't any real special features that take place, and couldn't get a complete reset of orange at that particular point. So once it broke the 50, rising lows of the Morganacci led to those being touched right there, down to the 32.75 range, which is pretty much just getting back to where these original points were, still in a sell configuration at this particular point, so we might even see a little bit lower take place at that particular spot. So all in all, still, I think a fairly decent range. We were at 20, it's moved down to 11, but if we see this low breakdown, that could expand again, and it would be right within the expectations of what we're looking for. And so that's why I say pay attention to those daily numbers from the 76 and that. And if you want to revisit them real quick, we can do that fast on the chart with the ABM up there at 44, and you have several others. 27, we've got for the DO slow, magenta, then you have the green at 20. So there's a good range, and then 23 for the 76, 23.50 actually for the 76, and that's still a decent number of points away. So lots to play with within these configurations. So stay focused on that, and keep trading clean signals as they pop in. There may be a lot of muck time in between, but there's not much you can do about that once you have set targets with things. So that's the long and the short of it for now, and I'll put up anything that's relevant on the Skype chat. As always, though, trade well and try to stay cool.